30th May 2022. This is the second video and hopefully it's just going to continue this as a sort of separate series of videos where I wanted to discuss the big picture. So by that I mean I'm not looking at specific trades, entries, exits, how to execute, and the micro stuff. I want to stick to literally the big picture stuff. So I want to try and take a step back and look at sort of what bigger things are sort of happening out there in the world before I sort of fine tune down into the trades. So by that I mean, well, what's trading extremely cheap, what's trading very expensively and had sort of valuation expansion, what are the current narratives, what are the black swans that are out there, because very much the idea of sort of this series, I think I just call it keep the label the big picture, is the forest through the trees approach. So I'm not going to sort of talk about specific charts or price entries or anything like that here. So to kick things off, so I've just been sort of making a note over the last week of sort of interesting sort of big picture things. So the insurance company that's like almost labelled as sort of a bit of a tech company called LMND. I understand it's trading at a cash backing. So it's not to say they won't burn through that cash if they lose money, but interesting nonetheless. Next one on my list is Tesla. Some of these numbers are a little bit out of date because, like I said, I've been making notes through the week. But anyway, I wrote down that it's on a forward P of 33, which, as I understand, doesn't include the more aggressive assumptions like assuming robotaxis or full self-driving or any of that sort of stuff. So arguably that's pretty cheap or pretty fair considering just how fast the company is growing. Won't get into whether that's sustainable or not. I don't know, but I can understand why the Tesla bull is saying this is just extremely cheap down here. So anyway, one to note there. Another sort of bit of a side one was I went and saw Top Gun. I thought, well, maybe there's a sort of trade there with Paramount. The charter I think didn't look particularly good, but I thought maybe because I went to the cinemas and everyone's out in the cinemas now, and maybe this is something to help sort of light a fire under that sort of struggling sector. Next one is coal. Coal stocks have performed pretty well, but I understand they're actually still selling it really quite cheap. I was in and out of one called ARLP, and that might have been a case where anyway, we won't get into the trades, but another one I was in and out of was Peabody Energy. So this chart here is the forward price to earnings ratio since last year. And for some reason, this data doesn't go back any further than that. First thing is here, it looks, I don't understand why, but it's so cheap. We're talking like a P of 2, less than a P of 2 back last year. Even now, really quite a cheap share price. So again, if we just think big picture here, assuming these numbers are correct, so back in January 21, this thing was let's call it a share price of $3 to $4, and now look, it's gone to $25 since. So what an absolute screamer there. And if you combine that with long-term out of the money options on that, my goodness, we're talking just absolute sort of fortune money there. I understand, I read a sort of Twitter thing that Peabody's still selling on a very cheap PE. Apparently it's even less than this on PE of sort of 2 to 3, or at least price to cash flow on 2 to 3 if you back out some one-offs there. So it does seem that coal needs to stay on the radar. Price action's actually been pretty good on these ones as well. So I should say, when I'm looking at the big picture, I'm not necessarily making trades off it, but what I am looking to do is, can I see how that fits with charts with good price action, and getting everything sort of set up for what I'm looking for. Anyway, continuing on, Warren Buffett's been buying a huge amount of Chevron, and that's despite the share price actually performing well already. So yep, that's the main one. So with Buffett just recently, Mike Burry, yeah, he's been buying Ovnative, so another oil and gas play. So it seems like these value guys, despite the share prices doing pretty well, they're seeing value in oil and gas. So those two guys aren't typically sort of just trading in and out. So perhaps a sort of more long-term value to come out of there. And I also suspect sort of this whole ESG thing is sort of going to potentially create tailwinds for those stocks, those companies that are still in the space. So just going back to Mike Burry, he bought this is like Q1 2022. Sorry, he bought put options on Apple, which you can actually see the logic. And it's actually really quite expensive back then. It has derated since. To me, the chart looked pretty stage 3. Sales were slowing. So it has come back down since. Saying that he bought shares in Facebook and Google. Facebook, I think, is, again, big picture, a little bit iffy. I mean, a lot of people are moving to TikTok, and it's not quite the sticky platform that perhaps it was considered to be. So it deserves to be cheaper, I would think. Google, Google's such a good company, but it's not particularly compelling at P of 2021. I know I could eat those words, but again, sort of slowing growth there, slowing ad spend. So anyway, big picture there. That's what he's up to. The other area I'm looking for cheapness or expensive is options, implied volatility. So Exelon, which is a stock I've got, just in the testing account holding the shares, the implied vol is in the sort of low 20s there, which actually looks pretty cheap considering just how well this thing's trended. I think it's good to keep an eye on how expensive implied volatility is. That helped me with the gold trade. Early in the year, the implied vol was really quite cheap. So even though the underlying price movement wasn't big, managed to make decent money nonetheless because of how cheap the options were. So I'm definitely keeping an eye on that section. And another one is Petrobras. I don't quite understand. Let's go to the daily. Now it went a very large dividend. I think it was like $4 or something this day, but the share price has sort of held up since. I don't quite understand why that's the case. The same thing happened with Zim. It went X. So around here, it still held up for a few days before it sort of finally rolled over. I don't understand that. But what I do need to keep a better eye on is, especially in some of these sectors like shipping and oil and gas, have just been printing cash, so they're paying sort of huge dividends to shareholders. I'm not saying that's going to be sustainable, but you can see these big run-ups in share price going up to the X date. So buy stock or buy options going up to the X date on these can be very powerful indeed. Go back to PBR. Had I been a bit more alert on my game, again, we're not going to talk about trading too much here, but there was a clear buy signal here going into what should have really got my interest, is going into a huge X date here. So I could have had a very large stop loss because I knew I was going to get a big dividend anyway, and made a small fortune out of that trade. Anyway, that's it. So I'm going to try and do this video, big picture video, once a week, and then more market, more sectors and stock specific, trade specific, on a separate video stream. I think for me mentally that makes quite good sense. I think about the big picture, think about the execution as two very different things.